Let's pivot over to starting your own firm and the challenges you faced when launching your firm, because those challenges, they still exist today, if not the same challenges, maybe new challenges. So walk us through the day one, what you had to do and how you did it.
Yeah. So that, I mean, this is a huge part of starting your own firm. I mean, this is probably the first thing, right? You know, people think like, oh, maybe I need an LLC first, or maybe I need a business plan first. You know, first, what you need to do is overcome your own insecurities, challenges, and fears, right? And it's like, am I actually, and I mentioned that a couple of times, right? Am I actually going to do this? And again, some unique situations. Now, it may not be unique. You know, if you're in public accounting, you've got a non-compete, you probably can't go out and start your business on the side. You can't do like this side hustle. But if you're in industry and you're thinking like, hey, I want to go do taxes, you could probably start that on the side. I mean, I got a buddy who was in that exact situation. He was in industry, started it up on the side, ran it as a side hustle for 4 years before he jumped into it. The organization I was at, we actually had a company policy that you could not earn outside income. And so we had to rely on the support that we got from the ministry. And so I didn't have that option either. I couldn't start this on the side. So it was a clean cut, like I got to leave and start from zero. Is that even possible? And so that's when I did like some revenue projections and stuff. And I would recommend, even if you can start on the side, you're going to want to do this, right? And so I kind of mapped out like the years of like, here's the cash that I have. Here's kind of my first year revenue projection. Am I going to be able to hit this? And conservative, kind of average and idealistic kind of time frame. And, am I going to run out of cash? Right. So that was a big piece. Other pieces are, I don't have anyone looking over my shoulder. Can I competently do tax returns? Can I put out work that I can charge for enough to support my family? And then, is this a good time? People were talking about that all the time. And this was 2019. I was thinking the same thing. So I called a different guy. I actually worked part-time for another guy who started his own firm too. Oddly enough, those two guys started in the same firm and then they went out and opened their own firms. And so I had worked for him for one tax season. I called him up and I was like, hey man, is this a good time to start a firm, or do you think I'm an idiot, like going solo at this point? Like, is it just not possible to go solo anymore? And he was like, no, I mean, he was encouraging, kind of told me a little bit of his story. And, I was like, I think it, you could definitely do that. And then going back to kind of that last piece for me that pushed me over was God's always taking care of me. He's going to take care of me. And I've done that's not like I'm going to throw logic and facts out the window, right? Like that's not what faith is. It's like, no, this stuff is lining up and God's providing a way. Even if I don't see all of the steps, there's at least some rationale here. It's not just like this blindly jumping into something stupid.
Yeah. You see enough of the signs, right? Yeah. The stars line up. It's
the
like, opportunity.
Okay, this makes sense. Stuff too. Yeah. Like, I mean, I'm at my previous job. I haven't talked to anyone about this. And someone comes up to me and is like, she asked me a tax question and she's like, you could open up a tax firm and probably make a living just by serving people at our company. And I was like, wow, like you don't even know that I'm thinking about doing this. And you like, to me, that's a providential thing that happens. That just is, it's not, you don't base your whole life on that one comment, but you throw it into the factors and you go like, wow, okay, that was confirmation of something I already feel led to do. Right.
Yeah. That's more than just a coincidence.
Yeah, for sure.
Right? Yeah, it's like she read your energy, and she almost like she read your mind. It's like, yeah, you'd be really good at this. You're like, hey, funny you ask.
Yeah, yeah, exactly.
I'm actually gonna do this. So when people started as a side hustle, not necessarily an LLC, they still need to get certified, right? They still need to go through all their proper requirements to actually be a CPA, tax strategist, anything of those things, right?
Yeah,
Series 7, right? That's what it is.
Yeah, well, so we don't actually have anything like that, honestly. Their Series 7 would be more on the financial planner, like the trading side, like stocks and stuff. So in terms of preparing a tax return, Will, you could open up a tax practice today and prepare people's tax returns for a living. Does that scare you?
Yes, it does. It does. I don't want to do that.
So once you have your CPA, there's some additional parameters put on you, or you have your EA, your enrolled agent, there's some additional parameters put on you. But if you don't have those things, you can prepare tax returns for a fee. All you have to do is get a P10, a preparer tax identification number. I think it's like $10, and I don't even know if they do a background check for that. You get the P10 and you put that on the tax return, and that's just a way for them to track preparers who are getting paid to do tax returns, but there's no requirements for that whatsoever. Now, you also have to have an EFIN if you want to actually e-file the tax returns, but you can go underneath someone else's. There's legal ways and illegal ways to do that. But basically that's just to file the return. But in terms of preparing it for a fee, you can do that with really no experience, no background, no oversight at all, which is kind of scary. But
yeah, I'm gonna tell you what I'm not gonna do. I'm not gonna do that.
Yeah, you're not gonna do that. You don't
I'm not
plan on
gonna
doing
do
that.
No, I don't. Because what if I do it wrong? And then the IRS comes after me, right? The biggest thing I fear
some people don't seem to care. Will some people don't seem to care? But I guess you have a conscience, right?
I fear as a business owner, as well as an American, is the word audit. Nothing scares me more than an audit because you don't know, right? Like you never even like I've had CPAs do my taxes the past 5 years as a business owner, and then my dad was an accountant. He did it all before that. Did they do it right? I don't know. I have no idea, but I'm putting my faith that they know what they're doing. I did 1 year with what was it? The online service, not Rocket Mortgage, tax, whatever the online service.
Oh yeah, just the regular TurboTax.
TurboTax, that was it. Yeah, 1 year I did TurboTax. I'm like, I think they definitely did that wrong, but
yeah,
I don't know. But let's go on because projections. I agree with you. That is something everyone needs to do at the start. But I can tell you from experience, we did projections and all of them were wrong. Like not even close. But I still like that we had some sort of projection as a goal to work towards. So how did you think of those projections? How did you come up with the process? How right were you? And in doing it back again, what would you have changed?
Oh, yeah. Yeah, that's a good question. So in terms of the projections, I mean, again, personal finances, I've always kept a personal budget. So we were pretty dialed in on the money that we needed for our necessities. And essentially what I did was I was like, I need this much money to provide for my family. And I went with kind of like bare bones, what do I need to provide for my family? And then I backed into how much gross revenue I would need, right? So I was like, okay, well, if I need this much cash, then if I factor in some taxes, I need this much pre-tax. And then if I factor in some business expenses, then I need this much actual revenue in my business.
Oh, is this the cash flow, the original cash flow?
What's that?
Is this the original cash flow chart?
Yeah, pretty much.
Okay,
yeah. And so, so you could throw that up there. And so it's like, oh man, I haven't looked at this in so long. But
memories, right?
But yeah, this was basically, so you can see, like I was fortunate enough, some situations lined up. I was able to set aside the $175,000 that it was like that's kind of our basically cash to live on. But it's not going to last us, forever. And so it was like, okay, if I have this much money and I make, less than what I need in year one, I'm going to pull from the cash reserves, right? And if I make less than what I need in year two, I'm going to pull from cash reserves, but I'm going to be pulling less from cash reserves. So basically what I did was I set a 4-year ramp, right? I've got cash reserves where if I make 25% of what I need, 50% of what I need, 75% of what I need, 100% of what I need. So those are the 4 years, right? So I was like, okay, if I need 180, which is what I think I had set my goal at, gross firm revenue at 180 to provide what I needed to live on based on my current budget at the time, then I could get to 45,000 the first year, 90 the second year, whatever the next number is, 145 and 180. And, I was like, okay, I've got the cash to slowly dwindle down to supplement the business income. And so that was, that's what I did. And I was like, well, let me run it on, like I said, things go really bad. Let's run it on things go really bad. Okay. Well, I mean, I still got 2 to 3 years to give it, a good run. Things go really well. And I can just take some of this cash reserves and stick it back in my savings and not have to use it up. And so that was kind of what we did. It ended up going a lot better than I expected. Basically, I hit my year 4 goal in year 2. So I hit the year 2 goal in year 1, got to about 90,000 of gross revenue. And then at the end of year 2, I was somewhere around 186,000. So I had already exceeded kind of my 4-year goal. It was providing 100% of what we needed at that point. And I was able to take whatever was left of our savings and stick it back somewhere else and use it for something else. But, in terms of investment, I mean, starting up a CPA practice, very minimal. I mean, less than $5,000, you can start up a CPA practice. So the money that I needed was to supplement our life because I couldn't do this as a side hustle. But still, the best investment I ever made. I mean, it's been the best return on investment of anything I've ever done in my life. So definitely worth that. If you're talking about side hustle or not, you kind of mentioned this a minute ago too, and we kind of went down the licensing piece. But you want to treat it like a business, even if it's a side hustle. You want to do those projections, get that going, set up a legal entity. You don't have to do this, right? I mean, you can do this as a sole proprietor. You can do this under your name as a sole proprietor, but definitely knowing that I was going to go full time, the most common entity people use is LLC. It's the most flexible. It's sufficient. I'm not going to get into like any kind of legal advice here, but that's the most common and usually the best legal structure for people. And so because it starts out as a disregarded entity, you set up an LLC and for tax purposes, it's completely ignored. So it's like you got it in place, but it's as if it doesn't even exist for tax purposes. And now some states have these PLLCs. It's the same thing as an LLC, but that's what mine is. It's a PLLC. It's a professional limited liability company. And all that means is that you have to be a licensed professional in order to qualify for having the PLLC. So it's like same thing, qualify for it, go ahead, use that. So that's what I use that. Started out as a disregarded entity again. So I'm running it tax-wise like a sole proprietor. But I've got the Wooten CPA name and everything like that. And there's compliance with that, right? So I got to license the CPA firm through the state licensing department, not only just myself personally, but the firm itself, if CPA is in the title of the firm. Now, some people will go a different route maybe and say like, oh, we're tax and accounting, and they don't put CPA in the title. And there's different parameters around that. But doing that, and I don't do any attest services. That would be like compilations, reviews, audits. I don't do any of those. And so that kind of lowers what I have to do. I don't have to get peer reviewed or anything because of that. Like I said, the tax side of things is pretty straightforward. And so, you get your legal structure in place. Make sure you're good with your own CPA license. If you are a CPA or EA, you're going to keep those things up. But put an LLC in place so that you got it ready to go. And, then next steps, again, most accountants are familiar with these things, but actually what I've ended up finding out is it's a lot different to be a CPA in a big firm or a CPA helping a small business with their bookkeeping or taxes and understanding kind of all of the other pieces that go to running your own firm. And so, we've talked about several of those already, but, next step is I got to get a tax ID number. So, I got my LLC in place, got to get a tax ID number. Okay, that's pretty straightforward. Go to the IRS website, get a tax ID number. Now I need a bank account. So got to go to the bank, got to take them the articles of organization from the Secretary of State, got to take them the EIN, get the bank account in the LLC's name. Don't want that in my personal name. Want that in the LLC's name so that everything is there and ready to go. Then I had to, in North Carolina, they call these like privilege licenses. In Florida, in Orlando, they call it a business tax receipt. But basically, it's just a fee they collect to give you the right to do business in their town or county. And so, I pay $60 a year to get this business tax receipt that says I have the right to do business in the county, in Orange County. And so, you got to do those things too, like their privilege licenses or their business property taxes. And so, you might have an exemption for your income, for your value of your property, which I do. It's less than 25,000, but you still got to file the first report. And so, yeah, a lot of those things, as you're starting out your own business, it's thinking through like, okay, am I compliant? Not just tax wise or, am I keeping track of my own records, but in my town, in my city, in my county, what do they need me to do? To have a home office, I actually had to go through permitting. I had to permit my house for a home office in Orange County, which was interesting. So I had to, we built the home here. And so I was familiar with the permitting process because of building our own home and all the permits you got to do for that. I was very shocked to find out just to have a legitimate home office, I had to go through permitting with the Orange County permitting office.